Tesla stock is currently up about 1.5% at the time of recording this video. We do have some Tesla news to go over, and I will get you caught up to speed. But really the main story today was the economic data, just coming in perfect. This is kind of what I said in the last video. I'm not worried about the economic data that we're going to get in the near term, and that could set Tesla stock up and really the broader markets for a pretty nice rally in September. When again, historically speaking, September is a really bad month for stocks, with only a 30% positivity rate and an average decline of negative 2.6%. And the best September we've had since 2020 was negative 4.1%. But in this market, where we're trying to figure out, are we going to have a soft landing? Is the Fed cutting into weakness? Are we going to have a recession? Each and every single data point that involves the consumer, that involves economic activity, is like a huge data point. So let's start with some of the economic data today. And let me just tell you, this was as good as it gets. Core PCE month over month came in at 0.2%. Now these numbers are rounded, so it actually came in at 0.16%. As you can see here from Nick Timmerhouse, as expected, another cool inflation reading for July. The core PCE index rose 0.16% in July from June. The 12-month rate is 2.6%. 6-month annualized rate is 2.6%. The 3-month annualized rate is 1.7%. So basically, if you take the last 3 month over month core PCE prints and extrapolate that over the next 12 months, basically, you're going to be at 1.7%. If this pace of core PCE month over month continues for 12 months. So this was really just another data point that shows inflation is not an issue. In fact, we may become worried about deflation in the coming months. Now, contrary to what you probably believe, deflation is much worse for you, it's much worse for the economy and for the Fed than inflation. Because not to get too complicated, but usually when you have inflation, you have a really strong economic activity. Typically, if you get deflation, you're either in a recession or very close to a recession. Because simply put, if you're seeing deflation, that's because people are not buying things anymore, or at least they're not willing to spend more to buy those things. So producers and companies, they start to lower prices to incentivize demand, and then you're in a very slippery slope where those companies that are lowering prices take in less revenue, which leads to more layoffs, which leads to those people getting laid off, spending less, which leads to more people getting laid off, which creates this economic loop that is really not good. So yeah, we've had 3 really good or low, if you will, inflation numbers. But if you start to see that come in even lower over the next couple of months, the focus may become deflation. But for now, these low inflation numbers are seen as good news. But as I did mention in the last video, I really didn't think PCE was much of a catalyst at all for markets. It was really personal income and personal spending which were the main catalyst of the day today, in which personal income came in at 0.3%. We were expecting 0.2%. That was better than expected. That is good news for equities. You can think about it like this. We've seen so much inflation, wages have not kept up. If we want to see more consumer spending, if we want to see the consumer start to recover and buy discretionary items, big ticket items, we want to see incomes outpace inflation. We want to see incomes accelerate here. As long as that is not fueling a wage price spiral in which the Fed just said at the last conference and at Jackson Hole they are not concerned about additional inflation coming from wage gains, then that's a huge positive. So personal income coming in higher than expected today is definitely a win for markets. And then personal spending, which was expected at 0.5% positive. came in at 0.5% positive. Now, some people were forecasting a number of 0.2%, so I guess there were some wide estimates here, but you came in at the higher end range of estimates, and that's also a big win. So in a nutshell, you had lower than expected, or at least in line core PCE. You had better than expected income growth, and you had at least in line expectations for personal spending. I mean, what's there not to like there? Now, before everyone gets super bullish out there, which have your own opinions, that's what's great about financial YouTube and just markets in general. Everyone has their own opinion. And my opinion is, I'm not concerned about the data coming out this month because I think it's so lagged behind. We're really catching data points from many months ago. I'm more concerned about the data that we may get by the end of this year, and I think that's why September is going to be a good period for markets. I think it's a sweet spot for markets. We will talk about all of this a little bit more in the next video coming out at 8 p.m. Eastern Standard Time tonight. I do think you'll get a lot of value out of that, but today does kind of solidify a little bit more my thesis of a sweet spot for September. But then again, seasonal headwinds can be strong, and we do have an election coming up, which could start to take more scrutiny in the eyes of the markets. I mean, let's face it, Trump's policies of tariffs, that's not great for economic activity. Kamala's policies of raising the corporate tax rate to be one of the highest in the industrialized, developed world is not great either. So it really doesn't matter who wins, economically speaking, there could be pain. And that may start to be an issue in September. I do think it's probably a bigger issue for markets in October, but we'll have to see. We did get the Michigan consumer sentiment numbers, final numbers for August. The headline number came in at 67.9. The estimate was 68, so 1 point lower, wasn't a big deal. 5-year inflation expectations came in at 3%. We've been at 3% the last 5 months now, so that's good. Michigan consumer expectations came in at 72.1. The previous number we had was 68.8. The estimate was 72.1. So this is pretty good. Consumers feeling a little bit better than what they have in the last 3 months. So now you're still down from where you were January, February, March, and April of 2024, but you did pop up a little bit. Michigan current conditions came in at 61.3. We were expecting 60.9, and last month was 62.7. So if you take a look at what we've seen recently, really over the last 12 months, this is the lowest number in 12 months for current economic conditions. So people do not feel great about the economy. They felt worse about the economy in 2022 when this number hit 53.8, but you are definitely in a downwards trajectory now. Overall, it did seem like there was a positive effect from this data also. They came out at 10 a.m. Eastern Standard Time today. I should also mention the Chicago PMIs that came in at 46.1. The estimate was 45.5. So that also did beat estimates. So really there wasn't a single bit of bad data today, and that is definitely helping to support markets and support Tesla stock, up still 1.5% at the time of recording this video. Let's now discuss some of your Tesla stock breaking news today. Tasha Keeney, an analyst with ARK Invest, says Tesla might be able to solve Robotaxi sooner due to a data advantage. And this is specifically what she says about the Tesla Robotaxi, which could come sooner than some people expect.
Our thesis on Tesla related to autonomy, we believe that they'll launch a Robotaxi network, and they've also stated their plans to do so, and they plan to reach full autonomy. Elon Musk has said, at the earliest by the end of this year, and he would be surprised if it didn't happen next year. Our forecast is a little more conservative than that. We think next year, possibly bleeding into 2026. But why do we think so? So Tesla has a great data advantage over peers. So, you're absolutely right that they were not first to launch a robotaxi network. In fact, that was Waymo. They launched in 2019. And Waymo, they launched first because they've taken a different approach. They use LiDAR, which is a system of lasers, along with a suite of other sensors, and they have meticulously mapped the areas that they drive ahead of launching in new cities. Tesla uses a camera-only system. They do not use high-definition maps. This makes the problem more difficult to solve, but we believe that they might be able to solve it at scale sooner than other players because of the data advantage. So if you look at the number of miles driven on Waymo's platform since inception, it's roughly 40 million. Tesla's fleet is driving over 200 million miles a day, and over 5 million of those are actually in the FSD software suite. But they can use all the miles in the fleet, of course, for running software in shadow mode, for simulation, and for that data collection piece. So this gives them access to important corner cases and events that they then are solving for in their full self-driving software. So this is what we believe will allow them to launch at scale, in addition to the fact that they're a vertically integrated manufacturer. They don't have to partner with an outside auto manufacturer to scale their fleet. We think that this gives them an incredible advantage. So we're looking out for the Robotaxi event later this year. As Kathy said, yes, Tesla has been overly optimistic about this in the past. But we've seen so much great progress, and we see many videos, and we have firsthand experience that the latest version of the full self-driving software is incredible. And you can already see drives where people do not have to touch the wheel. So it seems like we're really on the edge there of Tesla being able to launch a robotaxi service in a particular area, imagine one particular city. So we look forward to that and follow our research as we get there.
And since the 10K filings are coming out from everyone, essentially, UBS has bought 5.7 million shares of Tesla in Q2. And Capital Research bought 9.75 million shares of Tesla stock as well in Q2. And some of the biggest news today that is really catching the headlines is this. Tesla has introduced a 1.99% financing rate for Model Y in Canada, but you must take delivery by September 30th. Tesla has also launched the new referral program in Canada. You can now earn up to 6,500 Canadian dollars by referring anyone to buy a Tesla. The buyer using your referral link will get 1,300 Canadian dollars discounted off their new Tesla. Elon Musk shares this video that I shared with you on the channel yesterday of this individual with a Cybertruck running a dryer in his Cybertruck bed. Elon Musk shares this and says, "This is awesome," which this post currently has 56.6 million views on X. Elon Musk and Tesla have won the dismissal of a federal lawsuit accusing them of defrauding investors by hyping the cryptocurrency Dogecoin and conducting insider trading, causing billions of dollars of losses. Tesla has finally reached 60,000 Model Y registrations in Norway. And it looks like Lathrop's Megapack factory is working on full year-end output with fewer parked Megapacks, but more trailers that are actually taking them out of there. And it's being rumored that Tesla plans to release 2 versions of the Model Y soon. It will launch a 5-seater Model Y called Juniper, and it will also launch a 7-seater Model Y in Q4 of 2024. Roland Percher on X reports in the last 5 years in Europe, there are only 6 car brands with sales growth. Kia up 7%, Volvo up 11%, Toyota up 24%, Lexus up 33%, Porsche up 54%, and you guessed it, Tesla up 259%. Smart, Jaguar, Ford, Mitsubishi, and Opel lost the most, more than halving their sales. As far as option activity, via the interesting flow sentiment over on Ortex. You have seen 3 different trades today totaling about $600,000 with a positive order value of 0%. Volume today though is quite strong on the call side. This is looking at retail investor option activity, big money, hedge funds, okay, money managers, including everyone. Volume is 56.86% to the call side and 43.14% to the put side. Short interest of free float is sitting at 2.95%, so short sellers continue to cover on their Tesla short positions, with a dollar amount currently sold short of $16.91 billion. You currently have 81.97 million shares that are sold short, and again today, take a look at this, return shares of 637,000, that means covered shares, or shares potentially that were taken out on loan that are returned before ever being shorted. Okay, so return shares means if they're returning those shares, or took them out on loan, decided, hey, I don't want to short Tesla, and just return them without shorting them. That's a 637,000 today alone. Borrowed shares, which are shares that are borrowed, not necessarily sold short, but borrowed, but they can be shares that are sold short, of 128,000. So that means on net today, you have 509,000 shares being returned, potentially being covered. Over on StockTwits, retail investors actually feel a little bit more negative about Tesla today than they did yesterday, with a sentiment score that's bearish at 35. Yesterday, you were neutral at 49, which I find interesting. Message volume today is normal at 50. Yesterday, it was high at 59, and the participation ratio as well is dropping from recently being as high as 57, now down to 54. Google Trends data for the Cybertruck is sitting at 58. Which is largely unchanged from the last update I gave you. The Model Y at 26, the Model 3 at 24, the Model S at 10, and the Model X at 8, which are overall still really good trend levels. Inventory numbers for the Tesla lineup today are dropping quite a bit, which is great news. It's always better to have low inventory than high inventory. The Model Y recently just fell from about 7,500 down to 6,800, so that's great. Model 3's falls not as large, but definitely trending lower to about 6,000 now, give or take. The Model X at about 4,300, and the Model S is falling a lot as well to 2,800. And Tesla continues to run about 4,000 different ads with Google. Fed funds futures contracts are pricing in a 68.0% chance of a 25 basis point cut coming September 18th, and still pricing in a 32% chance of a 50 basis point cut. And that's why the economic data is going to be so important over the next couple of weeks. If we get weaker economic data, that does likely mean stocks fall, but that means a 50 basis point cut most likely. If we get good data, that means a 25 basis point cut, and stocks likely do well. By December, the highest probability, sitting at 45% of the federal funds rate, is between 4.25% and 4.5%, which is actually pricing in 75 basis points to 100 basis points of easing. CNN's fear and greed indicator is sitting at 61 today, which is getting more firmly in the greed territory. Yesterday you were at 57, which was also greed, but barely in greed. Market momentum is greed, stock price strength is fear, stock price breadth extreme greed, put and call options is greed, market volatility is neutral, safe haven demand extreme greed, and junk bond demand extreme fear. The percent of stocks currently trading above their 50-day moving average is going up a little bit today to 65.25%, up 0.79%. So not a crazy day out there, but there is some sense of a broadening happening. 10-year treasury yields are unchanged today, sitting at 3.86%. The 2 and 10-year yield curve inversion is inverted 4 basis points now. It was flat yesterday, and at some point over the past couple of days, it is actually uninverted. So I think markets are getting a little nervous here, because normally when you uninvert, you're heading into a recession. But I don't think we're at that point of a recession even being a topic of conversation among Wall Street. As you will see in the next video, there's many individuals, including Jim Bullard, which used to be the Fed guy for the St. Louis Fed back in 2022, that would talk about the federal funds rate needing to go to 6 or 7%, would cost 3+% red days. He actually thinks a soft landing has already been achieved. And we'll talk about that a little bit more in the next video. Point is, uninverted yield curve or not, this or that, people want to stick with the bullish narrative. And I see that happening through September, which probably does create a sweet spot for markets and a sweet spot for Tesla stock heading into the Robotaxi event on October 10th. So let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.